And Clay Patton on the Rural Radio Network. Let's take a look here at your weekend grain and commodity complex, grain and livestock, I should say, with Darrell Holaday, Country Futures, Frankfort, Kansas. Well, Darrell, things were looking okay till Thursday, and then the train kind of went off the rails from there. Is there any chance we could see some nearby recovery?
There's always a chance of nearby recovery. I think what we've defined, especially in the corn market this week on the grain side, is that we could see some recovery. On the livestock side, we had a major wreck, which you referred to on Thursday and Wednesday. It seemed like for the week. That market's a totally different market. We just saw a lot of panic selling, and is really quite detrimental to the market. But on the grain side, the Thursday USDA numbers came out and confirmed what I thought, is that corn yields would have to go up, or would go up, and they did. They went up 1.9 bushels the acre to 174.9, and now beans went up 0.3. I didn't anticipate much of an increase. It was a little more than I would have expected, but it kind of pulled soybeans off that early week high. We saw January beans close up or trade above 13.80 at one time on the week, but ended up then after the report at time as low as 13.31 and then back to 13.47. So kind of just a reaction to maybe a little higher number. That all fell right to ending stocks in their projections. The corn side, we now have stocks to corn ratio quite high, and really some would see those numbers go, Darrell, 175 is not a big yield. I mean, yes, that's correct, but it is off of where we were. And second of all, most importantly, I know we talked about this 2 months ago. The market doesn't care how you get what your yield is. It looks at the total bushels. And when you've got a crop of over 15.2 billion bushels, that's a lot of corn, and a market that we're really still not exporting a lot. Now, USDA did raise their projection of exports on corn. They raised the ethanol use, and they raised the feed use just to try to keep the ending stocks projection from going over 2.2 billion bushels. So anyway, I think it's really restricted the upside in corn throughout the marketing year, unless you get into a real problem in Brazil. And remember, their safrinha crop is the big deal. That's the crop they plant in February and early March after the soybeans. That's where that's 70% of their corn is produced. So we're a ways from that becoming a factor at this point in time. But the U.S. corn market is in position on a competitive basis to be able to export corn. In other words, from a price standpoint, we just haven't been able to generate a tremendous amount of movement at this point in time. But I think you'll see that pick up probably as we get into December and January and more into the winter months. But at this point in time, we're trying to find that low, post-harvest low, which I think will probably occur late November, early December. On the other side of the coin, that really was wheat, was just extremely lackluster, just continues to drift lower. USDA raised the Russian wheat production estimate from 85 million tons to 90 million tons. It really wasn't a surprise. Russia's told us it was 90 million tons, 93 actually, and USDA's been hanging down there on 85, and obviously that's why they continue to sell wheat lower, and that pressures the world wheat market, and so we had basically a lower market on the week. December corn, 464 on the week. Closed at 464, down 13 on the week. March corn down 13 at 479. November soybeans 1333, up 6 on the week. They'll go off the board next week. The March soybeans up 11 at 1347. December Kansas City wheat down 3 at 640. New crop July down 6 at 664. December crude oil ended up down 334 at 77.17, and that's after a rally late in the week. It came off its lows by a couple dollars, so at one time down over $5 on the week. This one continues to be a weakness on just the overall seasonal demand and overall weakness to some extent in some of the economies, and pulling some of the, quote, war premium out of the market, I think also has done some of this. The livestock were a very, very difficult week in the cattle. One that you remembered, you have $9 and $10 losses in the live cattle futures. You had on the week, and you have feeder cattle losses of $10 to $13. Those are COVID type numbers that we used to see or could have seen at times, and a lot of it's just the weakness in the cash. The cash market really struggled. The futures pulled the cash down, and then that causes panic selling. by producers. It's still a demand problem. It's not a supply problem. I remind people all week, in the last 6 weeks, slaughter has been down 200,000 head from what it was a year ago on the fed cattle side. So that's really in line with our expectations. We're really not backing up cattle. You hear people talk about that all the time. If that's true, then why haven't weights gone way above a year ago? As this reports this week, steer weights were basically unchanged with year ago levels. They are going up as they seasonally do. So, but just a complete panic sell. The market is trying to find a bottom. It'll find it at some point. But it was, we saw some cash down 450 on the week, but there was some trade below that. But generally in Kansas, Nebraska, about a $4 to $5 lower market, around that 180, 181 level for a lot of the cattle. But there were some cattle traded in the 70s, no question about that. But it was still trapped, full cattle all over the place. Cattle from Nebraska going into Texas, cattle from Texas moving up to Nebraska. The craziness we see happen in these markets because of in my opinion, because of the concentration in the packing industry that causes crazy things to happen because of arrangements and do things that you just really don't make sense. But in the big picture, demand's the issue. The inability to push those middle meats higher. Normally, we would see them move higher in November and December ahead of the holidays, and just hasn't happened and been able to happen. And that packers are just unwilling to bid any higher to get cattle. We're just willing to cut slaughter days rather than to do that. On the week, hogs were mixed. Continue to see the index gradually move lower, but we did see it steadying out in that 75.5, 76.5 area. That caused a little bit of buying, but as a whole, we tend to come off those highs. We tend to come off the lows. They tend to be caught in that 71, 72 area on December and that 73 to 76 area in February hogs. On the week, December cattle is 174.17, down 970. February down 1057, 185.22. November feeders 229.72, down 1087. January 226.42, 1303 lower on the week. December hogs up 15 at 71.90. And February hogs 75.57, up 10 on the week.
And that again is Darrell Holaday, Country Futures, Frankfort, Kansas. To work with Darrell, give him a call, 1-800-292-4038. Do remember, trading futures and options involve risk of loss. May not be suitable for all investors. Do consider these risks before investing.